In this video, we're going to break down all you need to know when it comes to moving averages and how we can use them to enhance our trading. And let's just get right down to it, guys. We need to first understand, what is a moving average? I mean, from its title, we understand it's the average price over a period of time. But what exactly are we talking about when we look at a moving average? And let's get into actually trading with them.
Absolutely, Brennan. That's a perfect place to start. You got to hammer in those basics. So, look, we all look at charts primarily, of course, to see what's going on when it comes to stock movement. And you'll pull up any kind of candlestick or whatever type of chart you might have, and you'll see all of this up and down and all this unclean movement, and it can look very confusing at times. A moving average is a simple visual way to have a smooth look, and I'm going to explain what these two lines are here in the chart. A much more smooth look at the overall trend for a given time period. So keep in mind, all you're going to end up doing here, and you have to focus on what particular time frame you have on a chart. This happens to be a daily chart, so each one of these candles represents one day. That is one time period. A moving average is only ever going to look at the average of those time periods, so each day on a moving average, 200, if it's going to be a 200 day, it's going to take 200 days worth of data previously and give you a mean of those prices. It plots it, and then of course you have a moving target, because the next day you kick out, of course, that 201st day and bring in the new one, and then it's going to slowly move up. Now, if you have a shorter time period, like a 50-period moving average, because it's only looking at the last 50 periods, the last 50 days in the daily chart, it will move much closer to the actual price range. And of course, the lower you put that time range, if it's like a 5 or a 10, you will get much closer to the actual movement of the stock. So it becomes very sensitive. So it's just a nice little way visually to be able to spot trends. There are some that are used more than others. I referenced here the 200 period, the 50 period as well. Those are very popular on the daily time frames. There are different moving averages we'll get into when you're looking at shorter time ranges, like a 15-minute chart, a 1-minute chart, a 3-minute chart. But the key thing is, it is all about giving you a clean, smooth trend over your desired measuring period, guys.
So you talked about simple moving averages, exponential moving averages. Those are the two basic moving averages that we have. A simple moving average is pretty simple. It just literally takes the last 20 days, like Neil was talking about here. This is a daily chart, so whatever time frame you have, so it's going to be the last 20 days or whatever your moving average is. In this example, it's 9. So we have both on 9 here, simple and exponential. So exponential moving average basically just adds one extra day. So it's one extra smoothing of a day out. And you're going to get here a little bit of a difference. For me, I don't really care when you're talking about a day trade and when we're doing scalping. But if you do look here, I do have an example of AMC. AMC's been going crazy. And I bring up this example because I think it's important to understand which moving average you want to use and why, whether it be an exponential or a simple, right? So exponential is going to be the blue, and simple is going to be the red, okay? So exponential will give you a little closer to current prices, because remember, you add that one extra day in there. So you're going to get a little bit closer to the current price than you are a simple moving average. So always that's going to be one to follow. I prefer exponential because it gives us just a little bit of a tighter out, right? So that's basically the only difference between exponential and simple, is one's going to be a little bit tighter than the other. So choose whichever you want. I would suggest using back testing to figure out which one. But like if I was long AMC here, look, the exponential moving average, because it's been going crazy the last couple of days, it has it at 1873, while the simple moving average pulls it all the way back to 1709. So again, taking in consideration that one extra day of movement here on an exponential moving average will put your stop just that little bit tighter. So I think it depends on what your style of trade is, Brendan, depending on if you want to use a simple moving average or an exponential one. But that's a rough idea. Look, you can look up, there's formulas, there's everything like that, but basically they're the same thing. One's just going to be a little tighter than the other.
And the key here, I think, is, guys, and as they were saying, we have to really take a step back and understand what exactly it is we're looking at. And it's simply just an average price over a given time. Yes, market participants are going to be paying close attention to that average price when we trade through it, depending on the period that you're looking at. But outside of that, it's not the holy grail. It's not going to make you win on every single trade, regardless of your entry forever and ever. Let's talk about trading now, guys. So we now understand both the difference between a simple and an exponential moving average. Let's put it to work. Let's see it on charts. Let's understand how we can maybe increase our confidence in a trade, or understand, you know, a trend in a trade, or maybe understand where we might be wrong in a trade based on a moving average.
Exactly, Brennan. I think this is what people use indicators for. And keep in mind, you know, no indicator is, like you said, going to be the holy grail or predict the future, but you can use them for some guidance. Now, everyone has heard the term, the trend is your friend. Well, how do you identify a trend? Well, I mean, simply put, if you find whatever moving average you have on a long term, and again, I'll go back to a daily chart because that is popular for the longer duration sort of trades, swing trades, and momentum and trends. So if you're trading above, let's say, the 200 period moving average, that's a dark line here, so giving you a lot of data, so almost over half a year's worth of data when you're doing that smoothing average. If you're consistently trading above it, there's a good chance you're in a bullish trend, right? And then you're going to see what will also happen a lot of times on that longer duration trade, in the 200 period specifically, is when it approaches that price and holds, you tend to get a little bit of a break because everyone recognizes the trend is continuing, and then so you get these tests of it and then breakaways from that particular price. Now, eventually the trend line gets broken, and we'll talk about that with a couple of indicators for when you move through, but an easy way to look at a trend is extended moves bouncing off of a longer duration time frame, that 200 period. A lot of times you'll see too as well, when you get that big distance from the 50 period, the shorter moving average range, when you start breaking ways away from that, you can have a strong upward trend. And of course, everything I said to the upside does get reversed if you start thinking about the short trend. Is, you know, in this particular case, AMD gets below that 200 period moving average, you know, were it to come back here, bounce off of, say, where this is like $84, $85, bounce all down towards that price and continue to hold below, you might say you now have a trending stock to the downside. Even short duration traders can open with something like, even day traders can open with something like, okay, this is a trending stock to the upside. I'm favoring long strategies on a day trade or a swing trade, even if you're not going to be holding it for 200 days or 50, as the moving average suggests. It can give you a bias. It can give you sometimes even support levels, as you see with that 200 period.
Yeah, my favorite moving average, and you'll see this on the show all the time, is the 50 period moving average on a daily chart. I think this is fantastic for swing trading. It's fantastic for longer term holds as well, where you're wondering, hey, you know, I like a name, but where do I get in? So I have a good example here of JP Morgan. This is going to look crazy because it's worked so well, but it is what it is, right? And this is what we like. So even back here, it even predicts this move to come to the downside back in March of 2020. We know what that was. That was the coronavirus pandemic happening right now. You get a break of the 50 period downside. It gives you the whole trade, and then a break back up. So what a lot of traders will do, and what I like to do here when we watch 50 period moving averages, and again, this is a simple moving average, don't need to complicate it or anything like that. Come down, look at it ride. It comes back up, tries to break 50 period, doesn't, comes back up, tries to break it again. You could short off of any of these points. Finally, we get a breakthrough right here. That's your signal to go long. And then again, you know, your upside, if you watch it come all the way back to the downside, it breaks again. Then you get all this chop. This is where we don't really like the 50 period moving average, when you get a lot of this chop. But then once you find an area of concern here, so a consolidation area, which is right here between 105 and let's call it 90, back and forth. I mean, the market was going absolutely insane in the summer of 2020. Once you get this break, then you can ride this all the way up, and you see back testing there, back testing here, small break, and then upside. But if we're going to talk about trading, I don't think Neil or myself or basically anybody would give 100% credibility, guys, to moving averages. You have to play them with an idea. So here you get a range. You get consolidation, then the break, right? This is where you then want to say, I'm long right here on this break. Where do I get out? As long as you're above the 50 period moving average on the daily chart, then that's when you want to take these breaks. So here you go. It's breaking, it's above, and then you can just ride it all the way until you break. So in this situation, you may be long 110, something like that. In this range, you can ride it all the way up through the 50 period, and that would give you a nice little return, even if you did get out at $150 upside. So that's JP Morgan riding the 50 period all the way up. So again, keep it simple, but to me, you need the moving average plus something else. So I think you got to find charts for technical areas as well, Brandon.
Yeah, great example. And I'll reiterate that. Use it in addition to help build your confidence into an idea and into a trade, not on its own. Don't look for, moving average crosses. Do more research than that. I want to show you one more example here, and I'll give you a great concept to think about just to wrap things up here, in addition to what the guys were saying. And that's just very simple. I mean, you just heard Sean say, keep it simple. Here's about as simple as it gets. Look at the degree of slope of the moving average. If you're wondering if a stock is trending or in a range, just look at the degree of slope. This is NVIDIA on a daily chart. Big move up. You can tell very, very sharp sloping moving average. We get into this consolidation where the stock is doing absolutely nothing. And look at how flat the moving average is. So it's, again, very, very simple concept, but something that you can look out for on any time frame. That's not necessarily just for a daily time frame. There we go, guys. A look at moving averages. We talked a little bit about simple moving averages, exponential moving averages, gave you a couple of trade ideas as well. Hope you enjoyed that one. Make sure you take a second, hit the like button, and subscribe to this channel. Here's Valeria.
Hey guys, thank you for this great explanation. Dear viewers, please subscribe to this channel to see more educational videos.